Hello and welcome to another update video about Ethereum. The situation is unchanged. Today we have Fed day. The Fed interest rate decision is going to be made today, or at least the statement is going to be released so we know, and that will be later today. And until then we could just be carrying on with the sideways action. Please be aware, and that's what I already highlighted to you yesterday. We now have a pretty full triangle count. So far the analysis of the triangle has worked out nicely. Did highlight to you a few times here over the weekend and yesterday that it could very well be that until we get that interest rate decision, we're going to move in this sideways range, and I hope that helped a lot of you to understand we are moving in a range currently. It could take a little while until we break out, and today we get a catalyst that could lead to a breakout, as we usually get these catalysts on the Fed day. Okay, everybody's sort of waiting for the interest rate decision, and then when it comes, then everybody can get on with their trading lives. We still are in a situation in which we see this price action as a wave 2 correction. The price, when it topped here on the 16th of April, formed the wave 1. We're now coming down in a wave 2. This unfolds as an ABC structure. The current primary count, which sort of served us well at the moment or until now, is that the B wave unfolds as a triangle. A triangle is a move that you can count in a 5-wave structure: A, B, C, D, E. That is pretty full now. It doesn't need to go any higher. It has done what it needs to do. It can surely go higher, but it doesn't need to go any higher, and it could from here come down. If, however, we break above 1963, it would invalidate this triangle. It would not invalidate the overall scenario, however. All it would lead to is that this was an A wave. The B wave is not a triangle, but actually a WXY structure. And this would be the B wave, and we would come down then. Only really if we make a substantial breakout above 2067 and follow through above 2130, the 16th of April high, I would assume we already are in a 3rd wave rally, and that the wave 2 that we currently have positioned here already ended here. That would be the alternative of this pattern. But for now, I remain of the view that it would look much better to get one more wave down here in this current wave 2 correction, and support is all the way down to 1533. Below 1533, I would have to get much more concerned about new bear market lows, but this story isn't written yet. We're just not there yet. We're quite far away from support, and I would at the moment still would expect another dip to the downside, maybe after a short higher B wave before we come down. Just note and be aware of the key levels that will make me lean towards a direct breakout in 3rd wave, as I just mentioned. Zooming in here, so what would be confirmation that we actually come down? So the first indication that this triangle breaks to the downside is a break of the D wave low. That is at 1809, but a break of the D wave low is not a confirmation the triangle breaks, it's only the first indication. Below that we've got the 1790 level, the B wave low. This is confirmation the triangle is broken into the expected direction, and we're actually coming down. For now, looking at the E wave itself, we have a pretty full E wave. It's an E wave is a 3-wave move. Now at the moment that means it doesn't mean it needs to have topped, but it means we have a full E wave. That can always extend. There's nothing that will stop it from extend to a larger 3-wave pattern. Just to give you an example, if I'm counting this as an ABC structure, that is a valid complete E wave. But if it needs a bit more time, it could just do this. And we have a larger 3-wave move. So hopefully you understand. As long as we stay below that 1963 level, this could be an E wave, even if it extends a bit further. But we have a valid ABC structure here. I've got an A wave, I've got a B wave, and I've got a C wave. And the C wave unfolded as a 5-wave move, so it's a pretty full pattern. 1, 2, 3, 4, 5 in an E wave. So we now need to be watching for a possible break to the downside. I would say on this very small time frame, a very first indication that the E wave is following through to the downside would be a break below 1856, the last swing low. Because you could argue we have a small 5-wave move down, a 3-wave move up, and now move down would confirm further downside. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.